Business Unusual, separating economic facts from fiction.
Good evening, I'm Andy Hodges. Welcome to ZFM Stereo's premier business show, Business Unusual, a show where we discuss everything to do with business, finance and economics. Now, tonight we're going to be discussing the state of the country's microfinance industry. And today we're joined by three guests. Godfrey Chitambo, he's the Executive Director of ZAMFI, who is the Zimbabwe Association of Microfinance Institutions. Welcome, Godfrey.
Thank you, Andy. Welcome, listeners.
Great. And of course, James Msipa, he's ZAMFI board member and MD of Quest Financial Services. Welcome to the show, James.
Thank you, Andy, and good evening, viewers.
Listeners, yep. And Precious Kwashirai, she's the director of Intercrest Financial Services and a member of the Winter School. Welcome, Precious.
Thank you, Andy, and good evening, viewers.
Right, now, Zimbabwe Association of Microfinance Institutions, ZAMFI, is currently the sole association of microfinance institutions in Zimbabwe, formed in 1999 as a trust. ZAMFI was established following a recommendation by participants from the Small Enterprise Education Promotion, SEEP, Micro Enterprise Conference of January 1997 held in Zimbabwe. The original goal was to provide a vehicle for structured learning and to coordinate efforts in addressing institutional and policy hurdles to the sustainable development of microfinance industry in Zimbabwe. Now, over the years, Godfrey, you've had some incredible partners. Your founding members were USAID, HIVOS, CAF, DFID, and of course other partners as CIDA, CIDA, SIDA, CIDA, SEEP, SEEP, GIZ, the Lead Trust, LDS, SNV, CGAP, ILO, and UNDP. So, I mean, the support that these institutions have given you must be instrumental in the success of ZAMFI as an association, correct?
Correct.
So, now, there's one thing that I'm interested to know, Godfrey, because you did say this, and I must say it was quite interesting. Now, the central bank recently, or last year, reduced the lending rates to microfinance from about 20-30% down to 10%. And the comment you made was that the central bank's decision could result in most MFIs resorting to unscrupulous means of survival. Now, maybe you could explain the thought behind that.
Thank you. Thank you, Andy. I think for the start, I just want listeners to take note that microfinance has become a very topical issue of late and also a little bit controversial. But I think from my point of view, it need not be controversial. I think topical, yes. Because if you look at our unemployment rate, apart from, of course, how Zimsters look at it, our employment rate is very, very high. So the informal sector is very, very active in Zimbabwe. So microfinance tends to thrive. So I hope tonight, Andy, that we are going to look at facts and look at perceptions and look at myths. But coming to the issue which you have talked about, people looked at the issue of interest rates in isolation. I think they should have looked at it, I think, in terms of how the economy and other things were holding at that particular time. We came into dollarization with a very high cost structure in terms of interest rates. Also buoyed by the issue that Zimbabweans had been used to this issue of banning, where I think interest rates were very, very high. So when the central bank tried to put sanity into the issue of interest rates, in our case, we would have thought that I think they should have looked at a number of issues, one of them being cost of capital. Apart from cost of doing business, I think just cost of capital. That one I also touch a little bit, not much, a little bit on the license tenure, because it also is a bearing on what we are charging.
This is the tenure that the central bank gives microfinance institutions, is that correct?
Yes. Currently, obviously, as we are aware, our license tenure is only 1 year for credit-only MFIs. I think even for the deposit-taking ones. And then in terms of capital, this license limits our members, where to hunt and fish and dive, So they are borrowing very short term and they also tended to lend very short term in terms of interest rates. So when the bank came on board to try and sanitize the issue, I think one thing they should have looked at also was, look, where are the MFIs getting the money to put? Because the opportunity cost, I think, was very, very high. So whilst as Zamfi and the practitioners, we agreed that maybe the interest rate at that particular time were a little bit on the high side. But in terms of sanitizing those high interest rates, I think we should have looked at a number of issues. Now, in my statement, what I then said was, look, the issue of regulating without, putting some other issues into perspective, it may lead to some people going underground.
Right. So you're saying that instead of looking, say, just at the interest rate itself, you need to look holistically at the whole marketplace and then come up with solutions to everything rather than just say interest rates are low. Because from a consumer's point of view, obviously 10% is way better than 20 or 30%, correct?
Correct. And I want to put the record straight. The Central Bank did consult. They talked to us, what is your cost structure? Why are you reaching this and that? And we did give our input into why, and then we also gave solutions to say, maybe if we solve this and this and this. One of the issues which we'll talk later, obviously, was even the credit registry.
We'll talk about that, yes.
We'll talk about that because we said, look, if it's active and it reduces our cost of running around to find out is Andy Hodges creditworthy, if we reduce those costs, then we might also reduce the interest rates. So some of the issues are now coming into play, but what we had said was, let the issues come on board first, then we reduce the interest rates. For instance, I think you're aware that last year, the Central Bank is putting quite some money into what they term the empowerment funds. I think there's money for the cross-border Dr. Kila's in the company. There's, I think, money for the women, I'm very sure. The minors as well. Even the Zimbabwe funds, I think you alluded to, they also got some money. If all those things had been put first in place, then obviously I don't think as MFIs we would have had any issue. As it is, we are still surviving.
Right. We
think it may have been a little bit harsh, but we found ways of surviving, not in an unscrupulous manner. I think we've managed to ride.
Okay, so it was just a warning rather than a statement of fact. Because I think you're right. The microfinance industry has taken a lot of flack, and I think we need to step back a little bit. Precious, I mean, first of all, what is microfinance? I think let's start from there, because we see it all around. We see it being bandied around. Microfinance industry is going to be a huge part of the sector. What actually is it? What are the products that encompass microfinance?
Okay, thank you. Usually, microfinance is providing services to the marginalized. Usually, we consider those people who are not considered by the banks. Usually those who live in the rural areas, or maybe who are in the urban areas, but they are not able to get loans from the banks.
Right.
Yes.
So, okay, but the suite of products then, I mean, you're obviously talking, apart from loans, of course, which is the one major issue, you've also got micro-insurance, correct? And there's all sorts of other products. What sort of products? Because I think that's one of the issues that was talked about by Zamfi, was the diversity of products in the market at the moment. And we'll talk about that because the central bank did mention that. So what type of products normally would you sell to the underbanked or the people that cannot get access to formal capital?
Okay. We have got for small to medium enterprises, those who are doing small businesses. We have got also business loans to those who would like to maybe to buy something to start a business. And also we have got agricultural loans where we finance the rural people,
right?
Whether they are doing farming or maybe they are selling something. And also other products.
Well, basically
home
productive home improvement.
Yes, home improvement loans. Yes.
And the size of these loans, I mean, there's obviously, it's not like going into a bank and asking for $2-3 million. I mean, what's the average size of a microfinance loan?
It depends with an institution, but usually they range from $50 to maybe 2,500.
Oh wow! So you can actually get a microfinance loan at $50.
Yes.
Oh right,
yes,
okay, yeah.
Can.
James, yes, that's
that's correct, Andy. Just to add on a few more products, we are looking at savings, where we are looking at micro leasing products. You also mentioned micro insurance. We're also looking at remittances, because if you look at your marginalized people in the rural areas, they get a lot of remittances coming out of their children who are based in the city, and some who are based out of the country.
Right.
So remittances also form part of the microfinance products. If you look at our numbers here in Zimbabwe in terms of average loan size, we're looking at $1,000. And it compares favorably with other countries. If you look at Latin America, your Bolivia, it's at about 387. Your Peru, 1,200. If you look at Costa Rica, it moves up, a big notch to 7,500. So you can get a microfinance loan valued at 7,500.
In fact, it's true to say that the microfinance industry is one of the major growth areas in terms of developing countries, particularly in Africa. That's correct, is it not, Godfrey? All right. Now, Zamfi actually made a good comment. They said that there were really three chief challenges they were battling. And of course, the first one was the high level of defaults by borrowers of loans from microfinance institutions due to the current low levels of disposable incomes and salaries. In general, people are prioritizing other home-pressing needs ahead of paying their outstanding loans. That's a worry, because we've seen the NPLs leap up quite substantially, I think, over the last 2017. Godfrey, what would you say to that? Is that a major issue for your industry, non-performing loans?
It very much was an issue. It is still an issue. But I think suffice it to say, I think from June last year towards September to December, we have seen a vast improvement in those issues. I think we've managed to rein in. What we noted was, and the way we looked at it was that I think in terms of also loan appraisal systems, I think some of our members were a little bit on they were too generous, And I think we've done workshops, assessments to make sure that we tighten up on that. And the coming on board of the credit reference system, we do have the private bureaus, and then we do have the central bank, which has come up with the bigger one. It also has helped us a lot, because we can catch some of the serial borrowers who have also become the serial defaulters.
Right, you mean the ones who leap from institution to institution borrowing money and not paying it back?
Exactly.
Yeah.
And we have said, because you see, delinquency starts at loan appraiser. If you get it wrong at that stage, no matter what you do after that, it's like a stillborn baby, and you can bring in doctors, sangomas, prophets, it won't work.
Right. So
I think as Zamfi, we looked at that and we said, look, these non-performing loans were a very big issue. But suffice to say, I think if you look at even the RBZ monetary policy statement of January this year, last year it went down to around, I think, 6 point something, a little bit up to 7 point something. We're a bit worried, but that's an issue which we are tracking, I think, almost on a quarterly basis.
Right.
Because it hits at our survival.
Yeah, because it's important, because obviously that's how you make your money as an industry. Correct. Precious and James, I suppose. You being in the industry as well and having your own companies in it. What non-performing loans. You heard what Godfrey said about the vetting, if I can call it that, of the clients and making sure that they have the ability to pay. What are you doing internally in your own organizations to ensure that non-performing loans don't become a problem? Because they obviously are a huge impact on your bottom line, correct? Precious?
As you know, Andy, I think in terms of loan vetting, it starts as soon as the client walks in. And we, as institutions, are coming up with robust, vetting systems. We now also have information sharing platforms, between institutions, where we share information on certain, bad clients. But with the advent of the credit registry and the collateral registry, we think it will go a long way in sanitizing our loan books and bringing down, the issue of non-performing loans.
Right. I mean, just to give you some numbers, I think the portfolio at risk ratio, which deteriorated over the quarter, this was last year, 8.34% as of December 31st, 2016, was 12.35% as of March 2017, against an international benchmark of 5%. These are numbers given by the central bank. So it's critical, of course, that we get that under control. Now, listeners, microfinance, I'm sure it impacts you. We're going to talk about that today. We're going to talk about where you can get it, who you can go, and also about the bad reputation I think microfinance industry has got. Fairly or not fairly, we can discuss that. So please feel free to get in touch with us. You can phone us on our number 0772 168 045, WhatsApp 07331 680 45, or our various social media platforms, Facebook and Twitter. Now, the second issue, of course, that was raised, Godfrey, and I think maybe Precious, you can talk about this, is the issue of funding of new loans. Because obviously, if you have a high level of defaults, there's a major impact on your funding or your ability to raise funding. And it appears that the funding obviously is vital to industry. So maybe you could talk about the funding side of the industry, because I hear that a lot of that is subsidized. Some of it is subsidized or through facilities or lines of credit and so forth.
Yeah, I think in terms of funding, I think in Zimbabwe, we've realized that if you want to start a microfinance, the first protocol is you use your money, either from your savings or from your relatives. And when you start that business, the money is not enough. That's when you want now to start looking for funding. Then, depending now, like in Zimbabwe, since our tenure is only 1 year, it's now then difficult to look for funding, even in Zimbabwe or outside. So what you then do, when you then look for funding and you get the funding, the money will be very costful, to be expensive.
So it's 1 year money, basically.
Yes, yeah, exactly. And like maybe if the tenure will be like 3 years or 5 years. So that's like the major challenge that we have.
Okay, so James, I mean, yes. Okay, so explain this to me. 1 year funding, 1 year license. Obviously, as Zamfi, which I know you're a board member of, I mean, that's not sustainable. What have you done to try and get that regularized or to increase the license tenor and so on? Just like, say, a bank that has a license and that's it. It's really about capital rather than the license validity. What's that about?
Yeah, so as Zamfi, we have engaged the central bank. We have engaged the Ministry of Finance. In 2013, we came up with the Microfinance Act. Now we're at a stage where the central bank and the Ministry of Finance have taken our presentations to Parliament to try and have some adjustments to the Microfinance Act to allow MFIs to have either a perpetual license or a 5-year license. So it's still under consideration, but we are told that something is cooking and it's almost there.
Right.
Hopefully, in this current setting of Parliament, we should get a positive result.
Now, I'm assuming, of course, that if the license is lengthened, which means lines of credit are lengthened, that would obviously be good for the consumer, correct?
Yeah, certainly. Obviously, when we approach our funders, the first thing they look at is the license. And the question that comes back to us is, how can we give you 5-year money when you have a 1-year license? So once that has been sorted out, if we get a perpetual license, which would be great for us. But if we get a 5-year license, it would allow us to get 5-year money, obviously at lower or affordable interest rates.
Right.
And we should then pass on that benefit to our customers.
Okay.
So it will definitely have an impact on the interest rates that we charge our customers.
Perfect, right. Now, the third thing that was highlighted by Zamfi was the challenge to do with the high cost of acquiring new technology, such as ICTs, which have now become the key enablers in reducing operational costs, improving efficiency and delivery of services in the microfinance sector. Because you talk about average loans of $1,000, but then you also talk it goes as low as $50 or as high as $2,500, for example, which means that that you have hundreds of thousands of clients, which I think the figure is around 320,000. Now, that's labor intensive unless you have some form of ICT or information technology platform that allows you to do that. Correct? Is that right, Godfrey?
That is very, very correct. And I think we have been looking at ways of reducing cost of doing business. And we are happy to say, I think, from the past 2 years, we have been working with 3 ITC service providers. I think these ones have made it cheaper for us to reach further, because I think the issue about brick and mortar as well, where it went with switch-on roads, it's an antiquated system of doing business.
It is, and now it's technology.
Yeah, it's now technology. And we have seen that with these systems, I think, firstly, we are almost real time, but buoyed with the shortage of cash, actual cash in Zimbabwe. I think people have done massive business now on digital lending, digital collecting, eco cash, one wallet, and all the like. So we think whilst we have not reached where we want to reach, we think we are certainly getting there. And I think the consumers will see a massive reduction in terms of costs if this thing catches on to the level at which we want it.
But the original outlay, I mean, Precious and James, you being literally on the ground in the industry, the initial outlay for these sort of platforms is quite large, particularly the recurring license fees. And again, you're down to this 1-year license that you have, aren't you? You're talking about putting in a lot of investment into your business, but then technically you may lose your license in 1 year, for example. Is that a true statement?
Yeah.
All right, perfect. Okay. Because the Reserve Bank says, our recommendation is that MFIs adopt adequate risk management systems and implement robust ICT systems and ride-on technology to offer more diversified and innovative products. Now, we mentioned that, you have over, 698, sites, selling points across the country. Now, what are they? Are these actual physical offices that people walk into? Are they agents? What is the structure? James, maybe you could look at that.
So it's a combination. So most MFIs have got very small client-facing branches manned by 2 to 3 people. So they are really centers of contact where clients just come in, do their application. But if you look at the back office operations of most of these institutions, they are centralized. So you'll find that a branch in Guruwe, all they do is they collect paperwork, collect applications, and then they send them to head office. But you also find that there are some institutions who have got robust web-based IT systems, which then allow their branches to initiate loans, approve them from those sites, and then the disbursement maybe comes from a centralized port, just as a risk management tool.
Right.
So the 681 branches are a combination of agents and physical branches.
Okay, now, if there I am out there in Muewa, for example, which is where I'm from, so I always like using that, how do I know where to go? I mean, number one, how do I know where to go? Where are these offices of your members, number one? Number two, and also, how do I know that the people coming up to me with trying to sell me products and microfinance are legitimate people? Because this is one of the major concerns, I believe, that there's a lot of people out there who are representing microfinance institutions, but they actually aren't. They're charlatans or fakers, if I can call it that. Godfrey, what does the normal Zimbabwean do? How do we make sure we protect ourselves against unscrupulous crooks, basically?
Yeah, the first issue, and I think I want listeners to take very serious note about this issue. The Microfinance Act actually protects very heavily the consumers, but it says you should only deal with a microfinance with an RBZ current license. I think that's the first issue. If you get in and there's no RBZ license, you have no business in it there. If you go under a Mohacha tree in wherever where you come from and you are trading money and there's no RBZ under that tree, you have no business there. So I think we want to listen, because as Zamfi we've had to arbitrate on issues where we are very clear that there's an anomaly here which has happened. It was never supposed to happen. So the first issue, I think people should be able to identify a proper, because people are really peddling money and people are selling money. But please, I think listeners, the RBZ license, that is one.
Okay, so let's talk about that. So is this license supposed to be up in every office or representative? I mean, when you say look for the license, where do I look for the license?
Yes, the Act actually says at a prominent place within your premises. So if it was here, at the entrance, it should be at a prominent place. Okay. The RBZ license should be there. Okay. And you can't mistake that license. And it should be current. Okay. Yes.
All right. Okay. And then that's the first point you said.
Yeah, that's the first point.
Identifying unscrupulous.
Yes. The second point, because currently we are the only association, we have also said, look, the Reserve Bank is like, people give birth to children, but one could be criminal, one could be a murderer, one could be a rapist, What we are now saying is, it would be better to look for the Zamfi certificate. It's also there. It is a very necessary, by the way. Also look, because now you know where to go when you've got the challenges. What you are saying is you get a license for RBZ, but when they're dealing with us, you know that this guy is already under some code of ethics. Okay. So that MFI is better to do business with.
Okay, so you have a Reserve Bank certificate and you have a Zamfi certificate issued by your organization.
We definitely do. My board makes sure she's a member in good standing, obviously. But yes, we normally, because when you come to arbitrate, our members are far much easier to deal with. Because they make the rules and regulations, they make the ethics, the code of ethics, and they abide by that. When that person is not a member, and then you come to us and say, MFI XYZ did this to us, we take a lot of problems. First, to bring that MFI to book, because he's not under any obligation. Right. So I think those are the first two. In terms of how do people know where we are, I think now, with those 680 whatever branches, I think most of our MFIs, they are now able to market themselves. I think if you're in the civil service, if you look at the police outpost, at the end you see an FMC advert. I think even in the growth points, I'm very, very sure that we do some outreach programs as well, where people in the agriculture, I think I've seen Mr. Msipa in Guru and whatever it is. So I think, firstly, the ones who need the finance and us, I think we're finding somewhere where we can meet, I think, and talk and advertise in the market.
So Precious, why do you think then that the microfinance industry has such a bad reputation amongst people, or which doesn't seem to be true? What is the underlying reason for that?
I think maybe the main reason is people don't really understand what microfinance is. I think maybe that's the first thing. Yes, I think that is important. Yeah, and maybe people have to be educated on that. And mainly, I think also, as microfinance, our visibility, it was like we were not like visible, and maybe in terms of advertising and so. Then you then realize that these other people who do the activities outside the microfinance are the ones who are very aggressive, and they are well known, especially like maybe in the rural areas, or maybe... I mean,
let's call them, they're loan sharks, basically, aren't they? I mean, this is what they are, right?
Yes,
they're not legitimate people. They lend you money and then they threaten you and whatever if they want their money back.
Exactly.
And this is what's happening, unfortunately.
Yes. So mainly people know those guys.
Okay, all right, James. Because this is a problem. It's an issue. You talk about exposure and you say we haven't done enough. But I mean, isn't this exactly what you're supposed to be doing? Enough to make sure that people know, they know who to deal with, where to go. They know they can contact Zamfi in need to find out. I mean, what do you say to that, James?
I think we have to make a distinction between microfinance services and microfinance companies that are unscrupulous. Microfinance services, in their nature, are good, and I think Zamfi has been working hard to try and put adverts in the newspapers, have a microfinance supplement in the newspapers to highlight the good things that microfinance companies are doing, or the services that are helping the bottom of the pyramid clients. And then you'll find some unscrupulous microfinance companies that, soil the name of the sector. And most often we've seen that they are not members of Zamfi.
These are independent chancers.
These are independent chancers who really need to be dealt with. So I think we, as Zamfi, we are trying by all means to highlight all the good works that microfinance institutions are doing.
Right. James, sorry, I'll have to cut you off there. We'll come back, don't worry. We'll just have to take a break now, listeners, so join us after the break and we'll continue this very interesting discussion, an important discussion.
CFM Stereo Talk.
But we as analysts, we have a tendency that when we are discussing about the ZIFA issues, we have a tendency of viewing ZIFA as if it operates from the moon. And outside the Zimbabwean economy, we are aware of how our economy is operating. These demands were just unrealistic.
The talk that gets you talking, Mondays to Thursdays between 6 p.m. and 9 p.m. It's CFM Stereo Talk.
Minister of Primary and Secondary Education, Honorable Dr. Lazarus Dokora. Different quarters from people who are opposed to this, from some parents, is that they were never consulted, that they never had an opportunity to have their say.
If consultation takes place and you miss out on participation, do you say that consultation was not done?
No.
The talk that gets you talking, Mondays to Thursdays between 6 p.m. and 9 p.m.
Your hit music station.
C.
Number one hit music station.
Holy water. When this fire.
CFM Stereo.
C. Business Unusual, separating economic facts from fiction.
Welcome back to Business Unusual. Sorry to cut you off before the break, James, but we were talking about unscrupulous actors in the microfinance industry. Sorry, maybe you could continue.
Okay. So my point is, we might not be doing enough in terms of trying to dilute the bad publicity that is coming through to the sector, but there is room for improvement, and certainly I'm sure we can turn the tables, and people will then understand what real microfinance is and how good microfinance services are, and what benefits can come out of working with microfinance institutions. I know in Nicaragua there was a no pago movement where microfinance clients were protesting against unfair lending practices and so forth, and there are institutions like Pharma which really did a good job in trying to turn the tables and get people to appreciate the value of microfinance, right? Because indeed it is a pillar in terms of economic growth for any country.
Right. I mean, when 70% of the population, is living under the food poverty datum line, of about $30, $32, this is one form of them getting finance that they could not get in traditional ways. So I think it's very important, listeners, that you make sure that the institutions you're dealing with are legitimate. They have all the required licenses and so forth from Zamfi and the Reserve Bank. They're reputable. Otherwise you will get into problems, and it's very important. And I also urge you to start looking at microfinance as a way to look at that, because Godfrey, I mean, you've got obviously consumptive lending and productive lending. Now, the central bank is pushing your organization and your members to increase productive lending to about 50%, or at least 50% of the book. Currently, I think it's down at 30 or 40%, and consumptive lending is around 70%. I mean, first of all, consumptive and productive lending. I mean, what's happening about that in terms of your members? Are you reaching those goals or achieving the goals of doing that?
And I think in the last half a year or so, the last 1 year, I want to say that our members have moved drastically in terms of moving towards developmental lending. I think at last count, I think around December, we were around 57%. And the Central Bank actually commended us on that. What I want listeners to also take note here is that these issues really were a major concern coming into multi-currency system. Multi-currency, first and foremost, we could not really go much into developmental because the money was very, very short term. In 2010, I think if you could get a loan for 120 days, you were a very lucky guy. It was 30, 60, 90. Because at that time, people were not very, very sure what was going to happen. Remember, the politicians were saying, $10 is going to come back, $10 is go. The wolf was at the door. So what people wanted was just to get as much money as possible, put it under the pillow and see what happens next. So if we're going to lend for 120 days, you couldn't do tobacco, you can't do paprika, you can't do sesame, you couldn't do anything. So we had a challenge on that. Secondly, the issue was also of risk. You know, coming to 2010, our sector in terms of skills, it was dilapidated. We had hemorrhaged so much that just, having a loan officer who could understand how to do loan appraisal, whatever. So what people did, they hedged against. So people only, what they did was, okay, fine, guys, for the meantime, let's go through the payroll best, where we just need the
salary slip.
Salary slip, and then somebody deducts and brings it back to us. But I think if you check, I think 2012 going this side, even when the Zimbabwe Microfinance Fund was operational, we definitely have been moving towards developmental lending because this is where the impact is. This is where development is.
Now, let's explain. Developmental lending is lending whereby the consumer or the customer is using the money to build something. Let's say to build a business or to build. Is that correct, Precious? Is that what you call that?
Yes.
Yeah. Like if they want to build a chicken run or something like this. Is that right?
Yeah. Or maybe in agriculture, maybe they are doing maybe maize.
Right.
Or maybe sesame.
Whereas consumptive lending is like, $50 to buy a new tire or to buy whatever, paint your house or something like that, if I had to be dramatic. Yeah. Is that right? Yeah. So the idea is for microfinance to lend money so that we can start growing the economy, because it's very critical, because the central bank says for this economy to turn around, we need to refocus on productive lending. MFI should start funding farmers in horticulture and value chain financing. James?
Yes, certainly. And I actually think as a survival strategy, if you are an MFI and you're not engaging in productive lending, then you're dying a slow death, because if you look at the branch distribution, you see that 67% of most MFI branches are in Harare, which means really there's a concentration of MFIs in Harare who are doing probably consumptive.
But that's wrong, isn't it? I mean, how do you get the bottom of the pyramid customers in the rural areas if 67% of your branches are in Harare? There's something wrong with that. But.
Exactly. So I think as a survival strategy, MFIs should start looking at going out of the major cities and major towns to the rural areas. That's where the business is. Right. And if you look at our current loan book, as MFIs, it's around 250 million, and the addressable market is estimated at over $1 billion. So I think that business is sitting somewhere and not in the cities, sitting in the rural areas or where there's economic production going on, and I think that's the direction that MFI should go.
Godfrey, I must be honest, and I in my research I didn't know that number, and now I do. Now I know 67% of branches in Harare. I kind of have a little bit of a problem with this, because your whole mandate is to reach the unbanked or the ones in the rural areas and so forth. So surely since 1999, when the trust was formed, to 2018 where we are today, there would have been at least some shift, at least in the geography of where the branches are kept. I mean, is that not something that Zamfi can say that we have not achieved our objective in terms of our mandate?
Yeah, in terms of that, Andy, I think we look at 2010 as a watershed issue. Before that, we were doing extremely well in terms of rural areas. You could go to Gokwe, Nyika, wherever. We're certainly there. But when things heated up around 2008, I think the branches we suffered most were the rural branches. Because firstly, our MFIs could not even get fuel to put into a motorbike to go and look at what was happening. So they shrunk massively into urban areas. I think most MFIs were just left with the point of presence, head office and another office.
Right.
So those were the urban. Then 2010 started off in a concentric mode. Start off from urban, 40 k's out of town, you are testing the waters. So yes, we do agree, but we are also looking at the issue that economic development has rather been limited to Harare only also, because as James was saying, you notice that Bulawayo, for instance, which is really a challenge, Bulawayo has got about 18%, Mashingo 7, Mutare 5. So everything has been sort of
in the urban areas,
centralized in
the
Harare and urban areas, but we certainly are going out there, as I'm saying, because as Zamfi, we are called upon. I think she's got projects in Gokwe somewhere. I think we nearly got waterlogged when we are looking at this at her project. We know his paprika projects in Makoni, Vale's got other. So Wonder Valley, we are now definitely getting there, but the pace and the speed is not what would have loved.
But, this is why technology becomes important. Let's be honest. As you said, you cannot have branches all around the country in every center, physical branches. I think the costs alone are astronomical. So you have to find another way of one, attracting clients to your business, getting them to understand what you actually do, correct? And then being able to contact you long distance, so to speak, or through different platforms, whether it be mobile platforms or internet-based or whatever. Is that not correct, Richard?
That's correct.
Just to add on to what Godfrey has just said, we can't also ignore the fact that for developmental lending to work, you need very strong technical support. You'll find that if you're going to do paprika production, we are a financial institution. We do not have any agronomy knowledge. We will need to partner with an organization that provides that technical assistance to the farmer. They take the farmer through the paces so that the production comes out in a proper way, and that also guarantees the loan repayment to the MFI. Right. So I think as a sector we also need to work on building relationships with technical assistance teams, and I know Zamfi is working very hard on that.
Yeah, because there are a lot of institutions that will come in to give you technical assistance, particularly people like CEDA and so on, correct, who do come in and help you. Yeah, but one other issue, James, I think is about the capital. I understand that if you're a credit lending institute, your capital is 25,000, correct? And yes. Deposit taking, it's 5 million. All right, and there's only 4 deposit taking microfinance institutions in the country. And some of the numbers are quite staggering. Like only 20 microfinance institutions account for 80% of all loans in the marketplace. Yep. Which obviously brings me to all sorts of questions about viability of the sector and whether the sector will go through some form of contraction or regularization, if I can speak it, mergers and acquisitions. But 25,000 and 5 million 1-year license. It appears, and obviously 10% interest rates. It appears that things are marked up against you in terms of profitability and making this a viable business, because you are a business. Is that not correct?
No, that's correct. At 25,000, I think it would be very difficult for an institution to break even or to procure, the systems, the IT systems that you spoke about. But I think in the wisdom of the central bank, they've pegged it at 25,000. I know it's going to move to 50,000 in 2020.
50,000 in 2020.
In 2020, yes, correct. Okay. But we have had discussions with the central bank around the 25,000 mark, and I think there are considerations that they are making, and hopefully they will prescribe a minimum capital requirement which also speaks to viability of the institutions.
Because if you're not taking deposits, then obviously the only way you can raise funding is through lines of credit or through donations or sponsorship, I suppose, if I can call it that, from donors. Is that not right?
Yes, certainly. But also, if you look at the donors or the developmental institutions that give grants, they also look at loan book size and capacity of the institution.
And when you've got 25,000,
you're
not exactly going to have a huge loan book.
Exactly.
In fact, I think the majority of MFIs, the loan book is $1 million, if I'm not mistaken, except for the big 20, if I can call them the big 20.
Yes. So there are opportunities for consolidation as well, for the smaller guys, to team up and have one big institution.
Well, that was my question, because, if you don't want to have 168 branches in one center like Gokwe. You don't want to have 168 offices of microfinance institutions. So surely there must be some form of cooperation amongst the operators, Precious, in terms of how do you consolidate, these offices? How do you, economy of scale, if I can call it that? Is that something that is being floated around in the industry?
Yeah. Actually, I wanted also to talk about the 25,000.
Yes, please.
I think that's why maybe you realize that it's easy entrance in terms of the microfinance, because the 25,000. If maybe me and my husband can just...
You can raise that.
Start that. I think also that's why I realized that maybe people don't take the microfinance serious because of the 25,000.
Because basically they're saying that pretty much anyone could do that if you can raise the money.
Yes, yeah.
Okay, because that is worrying. I must be honest, because then you have corporate governance problems. You have the ability to manage and loans properly, to make sure repayment is done, reporting to either the central bank or to the association. I mean, how this becomes a regulatory nightmare, does it? Godfrey?
Correct, and as I think James said, I think this is an issue which the central bank has been looking at, and again looking at the latest Monday president of January, I think it says that about 46 credit-only MFIs posted heavy losses, and we believe it has to do with the cost structure as well, because look, with 25,000 and 10% per month, even if you have to collect the whole 2.5 in terms of interest, you have rent, you've got the rest.
You're not viable.
You've got clients, you've got fuel. I mean, you've got personnel, and normally you have somebody called an MD. Can everybody share that 2.5?
Yeah, operating expenses are way over your
Yeah, so we
income.
do believe that we have looked at alternatives, including measures and other issues.
Right.
And we believe that the market, I think, was going to correct, but as James said, the central bank has been, I think, considering, and maybe if it moves to 50,000, we don't know whether at that time it won't be, it'll be too late again. We don't know, but I think it's something which is worrying.
Yeah, it's worrying. And I mean, at the end of the day, we need microfinance now. This is not something that we're waiting until 2024 or 2025. This is a way that our people in our country can access small finance loans to do the things that they want to do, particularly productive, or as you said, whether it's home loans or whatever. It's needed right now, and it appears that there's a gap between public knowledge of the microfinances, public understanding of what products that you sell, public understanding of where to actually go and make sure that they're not being ripped off by unscrupulous people and so on. And so I suppose from my perspective, I'd like to call on Zamfi to at least buck up on that one and really start pushing towards that, because our people need to have access to finance, particularly the bottom of the pyramid people. James?
Yes, certainly. You also find that the smaller institutions are the ones that cause problems for the sector as well, because they are pushed to charge 20-30% and go under the radar so that they cannot be detected by the regulatory authorities. So we need microfinance now, and I think Zamfi will push will engage the central bank to see how best this issue can be.
Yeah, because you can have plenty of microfinance companies, but really you want it to be a regulated, well-run, well-managed, with good corporate governance, good finance, strong partners, technical partners, and good technology. I mean, that would be your aim at the end of the day. Now, let's move on to some of the initiatives. Before we do that, please, viewers, please contact us on our WhatsApp 0733-168-045 or our various social media platforms, Facebook and Twitter. As you can see, I'm getting quite involved in this conversation because I find this microfinance is quite critical in terms of economic growth of our country. But there are a number of initiatives that have been worked on or have been done or are being worked on now to support MFIs. And one of the things is, and Godfrey mentioned this earlier, is the credit reference system. Godfrey, maybe you can talk briefly about that.
Yes, first and foremost, I think I want to pay tribute to the central bank. We do have a very good working relationship with the central bank, and maybe that's why we have reached a few milestones. But the major issue which we have come up, I think, as a country, is the credit reference system. I think we used to have the problems of multi-borrowing. I think, and that's where some of our negative publicity was coming from. But with this one here, we do have 3 private ones, and then the state one, the credit registry, the central. It's already in operation, and I think as of now, I think almost 80% of the MFIs are now supposed to start checking before lending out. I think at some stage is going to be a penalizable offense by the central bank. Well, yeah, if you lend out without consulting the credit registry, then it's going to be an offense.
Yeah, because the latest numbers we have, I mean, from the central bank, and this was probably September last year, they were talking about utilization by MFIs, the credit registry, was at 4.61%, while out of 60 MFIs co-opted as subscribers, only 24 MFIs submitted names for registration. Because, of course, you can have a credit registry, but each MFI needs to submit the names of the loans. Precious, is not to the registry so that you can, right? So, I mean, why won't MFIs become part of this? Because obviously it's a good thing.
Yeah, it is. I think the central bank, it's only that they introduced it last year. So it was like they were taking microfinances in batches to train them and see how we can use that. But considering the other private ones, I think most of the microfinances, those ones who are registered, they've been consulting those ones.
So James, I mean, as Zamfi, I mean, you're a board member, why not make it, as you said, a compulsory thing? I mean, this is a good thing. Why not say everybody must submit? You must make sure, as an industry, you must agree, of course, because Zamfi represents you, correct? I mean, this is what you are, right, James?
No, certainly. I think the one sticky point is to do with the IT systems and their compatibility with the credit registry. So I think we are at a phase where the central bank is encouraging institutions to purchase or to procure robust IT systems that can talk to the credit registry. So you'll find that for MFIs who have IT systems that work well, they're already connected to the credit registry. But so it's a process because it now talks to the capital of the particular institution.
Godfrey, when do you think that hopefully, I don't know, maybe 100% of MFIs will be on this registry? Do you have a date or?
Yeah. And I think this one to the credit of the RBZ, because we have been part of the process. I think from September last year, when those statistics were given, I can safely say we've been to Mutare, Gweru, Chinoi, Mashingo, Victoria Falls, and Bulawayo. I think Central Bank has covered. From what I understand, I think there's only Bedbridge and Chiredzi, which are left. So we've seen a massive uptick, to be frank with you. I'm sure that it should be around, as I say, around 60-70%.
Okay. So you're working on that number to get it up to 100%.
The central bank is working. We are involved, but I want to give credit to them because they certainly are working, day in, day out on that issue.
Yeah, because the central bank obviously sees the growth in SMEs and the advantage as obviously a boost to the economy. Now, another area that we were looking at was the collateral registry. Yes. Is that correct?
Yes.
Now, this is expected to be compiled to facilitate the use of movable assets as collateral substitutes for credit. Now, maybe, James, maybe you could talk us through that?
Yeah, so the collateral registry is a great initiative by the central bank. Why? Because naturally MFI loans are unsecured. And this is an opportunity for MFIs to have, secured loan books, by the movable assets. So I think in terms of acceptance, all MFIs or most MFIs now are happy to participate in the collateral registry. We have also been involved, in setting up, the guidelines of how we should work, and we think it's a great initiative. Speaking for my institution, we are already working on getting our loans, to be recorded under the collateral registry. Yeah.
And you, Precious, I mean, this collateral registry, does your institution benefit from this or utilize this collateral registry?
Yes, definitely.
You do, yeah?
Yeah.
And so how is it supposed to work? I mean, I come in, I want a microfinance facility or a loan. I have no collateral, okay? But this collateral registry allows me to what? To bring in movable property?
Okay, what you're supposed to do is, let's say, for example, you've got a car or you've got a car or something. It has to be registered to the Reserve Bank so that we know that Andy has got a car and has taken a loan for this much. So when you want to get a second loan before you have paid this, you won't be able to get another loan.
Right, because I mean that's the point here. We're not here talking about collateral like houses and all this sort of stuff, and that you normally get in the banking sector. Mm-hmm. You can use real things in the rural areas, your cows, your goats, your chickens, etc., as collateral towards the facility. Is that correct?
Exactly.
I think, and just to end on what Precious has said, I think there are two major issues here. There's inclusion now because of this, and then we are also unlocking value. For instance, we are saying the youths and the women who have no other assets, but if a youth has got 70 goats to his name, that person now can come and seed or put those under the registry. Women, your grandmother, where you come from, she's got what they call Mambe Umai. It does nothing apart from just going and grazing. But now she can now use that cow to go and say, put it under the registry, let me borrow money from Quest, and I want to do other things. So we are unlocking dead capital here. I think that's the major issue. And we are putting more people into the system. So we are now doing financial inclusion. I think those are the major issues.
Yeah, please. Because,
and the issue of interest rates that we spoke about, as we started our interview, the interest rates can now come down because there's a level of risk that has been discounted by having the loans secured by these movable assets. So it also helps to bring down interest rates and what Godfrey just spoke about in terms of financial inclusion.
Okay, but I mean, we're back to the same thing now. This is people knowing this, correct? The information streams going out to the population, out to the rural areas, out to people who may not be listening to this program, for example. And this is where you as an industry and Zamfi come in. I mean, this is really your goal. If you want to increase your base, I understand that you've been pretty stagnant at about 300,000 customers for the last couple of years. That's not growing. So does that not signify that mission of education? Of learning or of teaching the population about microfinance maybe stagnating at the moment? Godfrey?
Yes, and I think we go back to there's an issue where you said I think we need to do a little bit much more, and we need to be a little bit much more visible. And we are very, very happy in the ZFM that I think you give us these platforms. We are just hoping that people are listening because there are some very good initiatives. But if they are not known out there, they count for zero. So I think, yes, there are a number of good things we must do. We are getting there. I think microfinance by its nature is supposed to assist people getting out of poverty. Some are now doing wealth creation because of that. But I think... yes, we've done something, but
it's still not enough. I mean, I think we must agree on that.
I totally agree.
But at least we know that that there is the will in terms of the organization and the members to grow the microfinance industry and grow customers, because it's like any sector, it has to grow. Let's quickly touch on something because our time is coming up, unfortunately. The Zimbabwe Microfinance Fund. I think as of last year or 2016, it was standing at about 12 million, I think, and 17 million had been given out. Precious, do you participate in the fund, or is that more a fund on a global level for microfinance?
Yeah. As an institution, we're also participating on that. We got a loan where we are funding our customers, those who are doing livestock farming, like in Mutare and Gokwe.
Okay, so this is a productive lending fund, I suppose,
Yes.
100% productive lending.
Yes.
So your institutions in microfinance can draw down on the fund, which is held at the central bank, I assume, and then you can draw down on that and then re-lend it out.
Yes.
And the tenor, I assume, is up to 1 year again. Yeah, I think you're going to have to do something about that 1 year, Godfrey, James. They're at the board because it doesn't make a lot of sense. Imagine if you were a bank and you had a 1 year license. What would you do? You know. Well, look, I think we're coming to the end of our program, so all that's left for me is to thank my guests. Godfrey Chitambo, the Executive Director of Zamfi. Godfrey, thank you so much. I know you're a Dynamos fan and I'm a Cats fan, but thank you for coming on to my show. I appreciate that.
You are very much welcome. Listeners, please, we are here to serve you.
Good. James Msipa is Zamfi board member, MD of Quest Financial Services. James, thank you very much.
Thanks, Andy. It was a great outing.
And of course, Precious Kwashirai, Director of Intercrest Financial Services and member of the Winter School. Precious, thank you. It's been a pleasure having you here.
Thank you, Andy.
And as usual, we end on our quote. Reserve Bank of Zimbabwe Supervision Deputy Director Rachel Mushosho. She said, "The product offerings by the sector has remained limited and largely denominated by microloans, which constitute a significant portion of the microfinance institution's balance sheets. Financial inclusion for sustainable economic growth requires that the poor and low-income earners have access to a wider array of microfinancial services, including micro-housing, micro-leasing, and micro-insurance, amongst others. Something to think about. Good night, and you all be safe."
Good night.